It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks. We're going back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. And coming to you live at Tiger TV right there. You can watch the traders' charts and live commentary. I want to say 10 hours of live commentary coming to you each and every day. Also, check us out on your mobile phone at TFNN.mobi. Listen to us anywhere you go. And, of course, live inside the eSignal platform. Well, let's check out where the markets are at right now. We got the S&P is up 11 points. Russell's currently up 4. NASDAQ is currently up 10 points with the Dow up 130. So indices are looking pretty strong at the moment. And then going on over looking at our our metal markets. And then let's see here what we got going on. I'm pulling up a chart too. But looking over at the energy markets there, we got copper is down pretty heavy, down a little, almost 1.5%. We got gold down pretty strong, down 24 points on the day. And let's see here, we got silver is currently down about 5% on the day. So some massive, massive moves there in our metal markets. A lot of volatility. Day after Fed Funds Day, not a big surprise there. Even day of Fed Funds Day, a lot of times we can get some pretty massive moves on those metal markets. But moving really, really good. When had a couple short areas trades. I was looking at right around 1208, and I mean it got within 5 ticks both times. And unfortunately, I do if I'm going in and it's rising up, I do get in 5 ticks of the high there of the entry price. So. Anyways, let me show you a good example of that right now on gold just while I'm on the topic because it's a good example for you. And on this one, there's an example of the market rising into my entry. I'm aware that this will often happen. I got a short at this level, and a lot of times it may come like really close and then pop right down. Now, let's think about the other way. If I was going short like down into the level, if the trade's going to be profitable, it has to keep going down, right? So the trade's going to work and the market's trending down, then, there's no reason to get in early because if it's going to work, it's going to hit my entry price. Whereas if the market is bouncing, rising up, okay, it's rising on up, then I could choose right here to get on in early on the trade and wouldn't have to worry about a re-entry because it never actually hit the price. But meaning I could re-enter both times because it never officially hit the price and, violated it. But so right there you got a short and it goes in. And that's just within a few ticks right there. Hits target 1 and that's a couple points down. Hits target 2. Got a few more points. And it starts also to tighten that stop. Let's just say you use like a 10-minute deviation stop method. Okay, like I've taught before. Goes down, hits that. You just tighten it up right there. Comes up, and either you took it off at either target 1, you took it off target 2, or you trailed it. Took it off pretty much right in between. Okay? When that high was hit there. Then you got another short lining on up. Goes up within a few ticks. Don't have to have a reset because it never touched the line. Goes on up within a few ticks. And comes on back down. Hits target 1 like right away. Okay? Hits target 2. Okay? And then it does, if you tighten it up, I don't know if you tighten it up to target 1, that's one method. If you tighten it with 10-minute deviation stop, probably would be out of the trade. So either you tighten it here or here, or, there's 20 other methods, MVP, wide on diagnostic bars, etc. But anyway, so the nice move is that it did keep going down. It went on down to target 3 for us there. And did not have a target let's see, got a target, what is it? Yeah, target 3. So we didn't have a target 4, so that was the final target where I was looking to take profit on that trade. And we're down, I mean, a pretty massive amount there, almost to the 2 deviation level. So, anyways, a beautiful, beautiful trade on that, and worked out really well. All right, that's just, I mean, after that big move after the market. All right, now let's go ahead and check out some of the other markets, where they're at right now. We'll go into our energy markets. We've got oil. Oil is up 44 cents on the day right now. And we got natural gas, which is 0.5%. We got natural gas also up 0.5%. Let's go ahead and dive into oil specifically. We'll check it out. And so on oil, right on over here, what do we got going on? I got a couple shorts, sort of in a no man's land at the moment. But anyway, so on the shorts right here, I was looking for a short right around 81.40 as my sell price. And it went on down. It got within a few ticks. Now, this is coming down, so I'm going to way down the entry price. Comes on down within a few ticks of that target. Done, out. And again, if it hits 50% of my target, I'm moving my stop to break even just in case it turns around. So that one worked on out. Came back up, hit it again, but I need it to reset. Okay, so reset, just define that as a high right here. Sorry, a low for short being below my entry price. So whatever entry price it is used, whatever system you use, this is just a way that I like to trade. And so that's my defined entry. If I want to take that entry again, I make sure that a bar closes with the low above the entry price. It does. Comes on in. Looking for a move down here. Don't quite get it on that one, but with my, and it doesn't hit the stop either, but with the 50%, I do go ahead and end up getting out on this one on a break-even trade, just because it comes down to the 50%. I move my stop to break-even. No biggie. Next trade. Okay, so come on down. We get another little reset. Then we get a low above, okay, the market. And triggers, breaks the low of that, so we're in the trade. Got a stop loss that's a little further up here. This stop is a little bit different, but that's 1A right there, so we got stop right there. It go down. It comes up, comes down, again, within a few ticks, so we take that profit, or you move to break even if you didn't take the profit. But like I said, I like to take that profit within a few ticks of my target. It got to 81.23, and my target was 81.20. So I don't want to sweat a few ticks, and then, I mean, just account for bid offer alone. If you have a buyback at 81.20, well, maybe the last trade is at 81.20, but that hits somebody's bid, somebody's offer, right, and maybe you're last in line, not first in line. So that few tick rule also helps there, and having a DOM can be incredibly helpful. So if you don't know what a DOM is, just to show you an example right here over on Ninja, and if you go to File, New, and I use a static DOM, so that way it's not bouncing all over the place for me. And looking right up here, and I need to shrink my DOM, so give me 1 second so I can make it fit on this screen, okay? So 1 second here, and I'll make it fit on the screen. All right, I gotta now change the properties. Takes just a minute, because I have to use a little different screen resolution for the show. Let's scroll on down here. Let's go into price rows, and I'll just put 15 for the moment, just to make it easily fit. Hit apply. That should bring everything on up there for me. Basically what it is, it lets you see the orders above and below the market. And if I see like there's a bunch of orders, especially maybe right at my take profit level or a little bit above, then I may want to go ahead and, take profit before that level. If it's a much higher level, like if I'm saying, in oil right now, we're seeing like 20 and 40, 20, 30. That 40 there was actually a pretty high number at 81.15, 81.14 there. But not incredibly high. But if I'm saying like 100, 200 contracts, that's when I'm really going to be paying attention, when it's just dramatically higher than the other levels. Anyway, so you got that one, and then can't re-enter, comes back up. It obviously has a closing bar with a low above my entry. Going to go short, we got that 81.40 again. So it's like we're playing this thing all day, it seems like. Goes on, goes short, comes on down, hits target, comes down, bounces back up. That trade would have worked out, but, we didn't get the reset. Reset saves us a lot. So, would have saved us on a loss right there. If we would have just hopped right in, we would have lost. So, we saved ourselves a loss, lost out on a profit, but got, several profits out of the trade and, a couple break-evens or one break-even there. Not a bad method to manage risk. So I like to have my worst-case stop loss. I like to move my stop to break-even as quickly as I can. If a market's not moving in it with momentum, which I simply define as breaking the low of my entry bar on a short, or the bar after the bar of my entry bar as a short, then, so like bar 1 and then bar 1, 2, 3. So entry bar and then bar 1, 2, 3. One of these 3 bars needs to break the low of the bar I got in on, or the second bar after the bar that I got in on. So bar 1, 2. So bar 2 needs to break the low of the price I got in on. And that bar needs to have a low of that entry price. But anyway, so as long as all that happens, 3 bars within the entry bar, or second bar after the first bar to the entry bar, then I look at momentum. If I'm nervous, I can always tighten up my stops. But just, when you tighten up your stops, you do take on the risk of getting stopped out. But you also, lower your risk or remove your risk in the trade. So you may, but also limit your ability to make profit. So you just got to keep all that in mind when you're doing it. Anyway, so that's a nice review on oil. It's pretty flat, choppy market. I mean, besides that nice little initial run up today. And that's what we got. Let's go ahead and let's check out natural gas. It had inventories come on out this weekend. And we'll look at it. And over here on natural gas, going on in. Let me see here. I'll bring that on up for you. And we'll go to the expected range. So I'm going to add expected ranges on here. We can also look at some potential spikes just to see how they did. And, how far do we move on that expected range on the natural gas report that came out today? It's released each Thursday. A lot lower than normal on the expected range. So right over here, looking at this, let me zoom, get on back to the end here. But that didn't trigger off a spike and really just a flat market. So if you could have got a range-bound trade, like a butterfly, and would have worked out really well. You notice how it comes back in, gets really tight. So a lot of times they'll pop up and tighten right on back up. And what were the results? We can check that out specifically on natural gas. Going on over here, let me pull that up for you. We'll dive into it. All right, so right on over here, we got our natural gas reports. And they came in pretty close to expectations. Nothing that major. All right, stay right there. We'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. And we're checking out where the markets are at. We're looking at the news and going through all of it. What we have on the news right now is we had advanced GDP come out this morning, so that's could be a pretty big market mover. It's one that's so unstable. We actually said just be aware of the event without having specific stats on it. It could really rock those indices out, for you. So you got to be careful on them when those big market moving events come out. Don't have as much of a detrimental effect on a lot of the other markets, but it is just something that you definitely want to be aware of. So always keep up with the news trading plan so that way you know when things are coming out. And news that we're talking about that you need to be aware of specifically, we'll go through each one of those and make sure you have that down. And, it can work out great for you. So it's just, you want to, like I said, be very aware of it. And, use caution because, the market can move really fast, like right around those reports. Sort of after the report's over, fine, no big deal. It's more, right when that report comes out, the market can just move so fast that you don't even have a chance to react. And so when a report like that is about to come out, a lot of times I'll be tightening my stop, if not taking off my, profit on the trade. And use a lot of caution right around that as well. So where are we at right now on this? I'm just trying to pull up a couple things, put it all together. And let's see, what do we have there? So Okay, so another example, there was some rockiness, like I said, on the indices, like when that GDP was coming out, unemployment claims are coming out, advanced GDP price index is coming out, Yellen's talking at 9 a.m., so all those things coming out at one time. And, here's an example, just looking at, the Russell. We're going in and checking out some trades on this, from the day trading plans here, and going in and looking at this, and it's moving on down. We get down to within that 5 ticks. Like I said, I'll take profit, 5 ticks before. So 1133.1, we get to 1130, 31.6. So we get right there, 1131. So, worst case break even on that trade. But because, just measuring the entry to the profit target, and that's if you got in at 6:30 a.m. Many of you not awake at that point. We go over here. We get a long trade. So to go out in, it does get within, 5 ticks of the high there. We got 1147.3 versus 1148. So that goes on in. Again, we can use that fib level just to measure that 50%, so we know we're moving there to break even on it for us. And, of course, that one does go in, and that one takes profit. This one, either you took profit or you got a break even on the trade, one of the two. Going on over here, and then it comes on down on you, but right here at 10 o'clock, again, after all this news is going out, it's going to be a little bit more. This is happening, 8:30 is when the news happens. 9 o'clock, Yellen is talking. She starts talking, things go a little bit crazy. So you could have taken that trade, but that's right there at market open. Market flies up, market flies down. Probably would have got in and got a profit, and then it flew down. You're not in the long trade, so you don't get stopped on the long. But it could have easily nicked you in right there on the short by just a tick or two and pop back up against you. So it goes right up there. You do get another long to hop on back in on that long trade there. 1, 2, 3. We're in the trade. We stay in the trade at this point because we broke the high of the first bar right there. And as we do, it moves on up. Hit take profit on that one. This one would have probably ended up just getting you in and getting you out, unfortunately, pretty fast. So let's see here. This is going to happen, but let's see, whatever that color is, pink. But anyway, so we got, 1, 2, 3, profits on the day there. Moving on up, actually, now towards target 2 as well on the Russell for anybody who actually goes for additional targets there, or maybe doing further out of the money binary contracts. We got a lot of targets. Moving up, what is the next target? We got 1103 is our next target up on the Russell. Moving on up to 1162.2. So right there before the one deviation. And then if it does break on up, could go as high as 1171 is the layout of the land that we're looking there on the Russell for you. Okay, so that gives you the wrap on the Russell. And, sort of summarizing the news impact on it as well. Do that right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so looking on over at the S&P, the impact on the news, it was a pretty wild ride this morning. And the one time where, again, really dangerous, right when all that news is coming out. They're talking and everything else. It could just be, you never know what their statements are going to be as they get released out. And, Yellen starts talking at 9 o'clock. Unemployment claims come out. I mean, just a lot of different little things all happening that you want to be careful on. When they happen there. So let's check it out. Let's look at the S&P today, okay? So looking at the S&P early in the morning, if you're doing the early morning hours, had a breakout above. This bar missed it by a tick. This bar actually broke it going long. I'm not going to get in early. I'm going to make it hit the price, right? So market's going up to go long. So if it was coming down to go long, I get in early. But it's going up to go long. I'm going to make it hit the price. Hits the price. Then bar 1, bar 2, bar 3. Bar 2 doesn't pass. Bar 1, bar 3 doesn't pass. Bar 1, 2, and 3 doesn't pass the entry bar there. So we get a little bit early, and we take a tight little stop on that one. Get out quick. Comes on down. Goes short early in the morning again. Still 5:30 here. Go in, go short. Goes on down. And move, at 50% there. Move to break even. We're still in the trade. Comes on down. Hits target 1A. There were some additional targets, too, if one would have went for it. But it tightened up pretty quick there. Not a big surprise. You had that 0.7 deviation level in your way along the way to that, second target. So always good to be aware of those deviation levels. Turns on back around, hasn't reset yet, can't go short, does reset, finally get a short, but then it turns back around and then bar 1, 2, 3 after it touches there. So either you got, sorry, I got to move that one. So either you got stopped, depending upon if your stop got filled on that. You might be using a stop trigger with the indicative, which is a beautiful thing because it averages out the price there. But it got within like a tick and came back down. So you may or may not have got filled on that if you're using limits versus stops. Anyway, so 1, 2, 3. So we take a small loss on that. But then it keeps going. 11 a.m. market runs on up, had a buy at 19.79 with a target at 19.85, then on up to 19.91. And it basically got within a few ticks of that one, and it's still pushing on up. And as far as do we have additional targets? Yes, we have one more additional target. Let me go ahead and show that one to you. The additional target would be up at 1998. So we're looking for 1991 right now. We may have actually broke that there. Zooming in. I got 1990.5, so within 2 ticks. Anyway, so next target being 1998. And if the market keeps breaking out, now you could use this. This is one thing. You could use these additional targets. These entries and additional targets could also be additional targets as you keep going long, 2003, 2006, 2015, or maybe a really tight stop because if the market decides just to fly today, then there's a potential later entry for you along the way. But overall, I took a little loss there, a little bitty mini loss, like late, right there. Took a nice profit early, which more than compensated. Took a loss right here, but then took a nice profit and still going there. That more than compensated, so it's done well. You at least ought to be break even to, should be positive overall. If you took all the trades, if you just took the morning trade, still should be at least break even or highly positive on the day. So it's working out well. That gives you the target levels for where we're at right now. And potentially another buy above the market and another sell down at 1970 and then a entry at 1879 if we get a 10-minute bar that closes with a high below 1879. All right, let's see here. That gets you caught up in try to cover a few different markets for you. We had Aussie dollar over here. We pull that on up and see where we're at right there. And I'm more wanting to go over the news on that one specifically. Let's see if that'll load it for me correctly. Oh, there's the Aussie yen. Not quite the one I'm looking for. Hold on a second. And let me also pull up the news trading plan on that. And we'll go into it. And let's see here. Going in on the news trading plan. And what movements do we have? So, trying to pull this up. This is a pretty choppy market today. It didn't work out near as well as Aussie usually does for us. But the new trading plan itself, we're looking for a movement. I'm just trying to get this thing to open. May have to just open in the chart. Because that would seem to be stuck. So, pull up a chart over here. Just want to examine the Iron Condor from last night. See if I can get it to pull up for us. Come on. There we go. All right. So, finally. All right, so hopping on over and looking at the report for last night. We had the GBP is what we had. The PPI. There we go. So tonight we got the PPI. All right, I had it backwards. All right, so last night, tonight we're going to have the PPI. So let me go, I guess we'll just bring that one up. We'll talk about that real quick while I have Aussie up on the screen. We got a PPI private sector report on the Iron Condor. We're entering at 7.48 at 9 o'clock. Entering at 7.48 at 9 o'clock expiration. Okay? And looking for a $25 minimum profit on the trade. So that's the the news, basically the trade coming up tonight, and what we'll be looking for there. Let's see here. And again, always be really cautious on FX news right when earnings comes out. I think this might be a good learning opportunity on this. Let's see here. Okay, I think I can, if I can unfree, there we go. All right. And then we'll also go into pound here in a second and talk about that in detail. All right, so last night, what happens? Let's go and let's look at the trade setup. We go in and, early at night, we get a short right here. I mean, pretty much right on the 3 a.m. mark. But of course, it comes out right at 3 a.m. So we'll look at the next trade here. It closes on up. And so we go there, 1, 2, 3, basically out on that trade at break even. Moves on up, and I was looking at a short down at 87.60. Just really bearish right now on the Aussie, looking to sell into the rallies on this bear move. It moves on up, 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 up. And then we get this, look at that, it's right with the news. Okay, right with the GDP, which is going to affect the dollar. Right with the unemployment, which is going to, can easily impact the dollar with everything that's going on. So, to be really careful, right there, right at that news announcements on, any kind of currency. I mean, it can be a great thing for you, or it can just nail you. And most of the time, I mean, it's a 50-50, just to say the truth. It's just 50-50. Right when that news happens, everything sort of goes out the window, and you just got to give the market a chance to breathe for a few minutes. So usually about 10, 15 minutes, and it's called fundamental shock, okay? And so anyways, that comes out. If you got in that one, it was just boom, boom, down and out. All right, it was that fast. Hopefully you didn't take that trade. Again, right there at the news. Always want to be aware of that news. Going in over here and looking. We got another short right here where it touches and breaks the low. Actually hits the target pretty fast. So goes down, a small target, nothing massive. Goes on back up, still rising up. So get another short. 1, 2, 3, just sort of a choppy day overall. If you did take this loss, I mean, hope you did OCO or whatever, because if you took it, it went right up there. And I mean, it would have stung a little bit at 23 ticks. You made 6, you made 14. You're down about 6 ticks on the day right there on that trade. So just a tough thing. If you were able to avoid trading at the news right there at 8:30 when the GDP is coming out, then you would have, it would have been a so far, slightly positive day for you. So not a whole lot happening there in the Aussie. But we do have that news trade tonight, so be aware of that one as well. Just always be aware of those news trades. You can hedge a trade off before news. You can use a low-risk spread. You could use a low-risk binary contract. Often if it does move big, it's going to move to multiple targets. So we are giving you some targets to look out for. If the trade does work, you can even, strangle the trade and use targets on both sides. We have a target up here, we have a target down here, it gives you a couple targets to go after. So there's a couple ways that you could use those on those high-impact reports, but just be careful that 10 minutes around news. Looks like on pound dollar, we had a pretty similar situation overall. So let me switch over now. We got that up. We'll go on in and look at the pound. And again, right there, had a nice short. Great setup. This one actually would have worked for you, but you would have probably had a heart attack in the process. And that honestly really depends on the market. I think what happened, it flew down, it popped back up. But we go over here. But first we have the nighttime trade. 1, 2. It does break the low, so you're in the trade still. It goes on down as it hit that 50% mark. It does. Tight to break even. You're out of the first trade right here at break even. That's going short right there at 59.75 using these deviation levels. Okay, and then we got another short right down here. It goes down. Remember that 5 ticks rule. You can be really happy about that. 59.97. Low 59.50, and we actually got 259.50. Actually got right to it, to the tick. So bid offer spread. You may have not made it. So you'll be glad you did. It goes down right here, hits it, takes profit, bam. Flies on back up the other way. That's why you like to take those profits, or at least have that thing to break even in a heartbeat. From there, where do we go? Well, we're going up, 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 and we get another short. We got a short right here. We go in on the trade. It touches it. 1, 2, 3. And basically out at break even. Probably missed out on this trade unless you're in maybe a binary or something like that. And then it would have came down. It did at least hit the profit target. This one, if you're waiting on the reset, because like I said, you got out of the trade, the reset where the bar closed with the low above the entry. Then you got a short, went on down to target 1. Still could potentially move on down. We did break through settlement. Target 2 on that trade would be down at 59.90 over on the pound dollar. So not looking too shabby there. Visa had earnings today as well. So I told you to be aware of that just on the Dow and all the movement going on. We got Aussie, we got yen news tonight. So let's see, tonight, so got to have yen various reports at 7:30. These are not as big of reports, but you need to be aware of them. There are a whole slew of them coming out right there at 7:30. And then monetary policy, this can be big, right at 11 o'clock. So just things to definitely be aware of. Let's see here. We go into the, then in the morning, 2 a.m., they got their biggest spend outlook report. 2:30, they got their press conference. So a lot of yen news. Then going on in, we got the Euro-French consumer, 345. We have various Euro reports being released at 6. The Canadian GDP is going to be coming out, so be very aware on that one. Be coming out right there. We're looking for an iron condor on that from 8 a.m. to 10 a.m. On that trade. And we'll be looking for a $30 profit for the 9 a.m. release there. So entering as early as 8:30 release. So 8:30 release. And just be aware that that can impact the dollar or any dollar pairs when that report does get released. We'll also have some earnings releases happening in the morning. We have Chevron on the Dow there. That can impact everything. Exxon on the Dow coming out right before markets open on up in the morning. So 8:55 in the morning there, and then 8:30 there on Chevron. Got a various slew of reports coming out in the morning at 8:30. Core PCE, employment costs, personal spending, personal income. So 8:30 is going to have a lot of little things happening. Just be aware of those on your currencies and indices there. Chicago PMI coming out at 9:45. Small impact, usually not a massive thing. And then University of Michigan consumer sentiment. Again, most trades have about a 10-minute direct shock impact on the market when it's news. And now they may trend and keep trending, but once that's done, then that fundamental shock or change is usually over within about 10 or 15 minutes. Okay, well, that gets you caught up on the news there. We also had a pound dollar last night we were looking at an 11 p.m. to 7 a.m. So looking at that trade specifically, if you got in at 11 o'clock on an iron condor, and right over here, and you bought the lower spread, you sold the upper spread, and you had the thing until 7 a.m. Then it moved, settled out at 13 ticks. We're looking for $30, so that's great. That means you made a 17 ticks or more profit on it with a minimum profit of $30 on buying the lower spread, selling the upper spread over on the Nadex platform. Okay, let's see here. What else we got going on we can check into? So let me close this on down. We got that done. Let me go in here and look at the dollar yen. So pulling up the dollar yen on over here and looking at how we did this morning on that one is a pretty wild ride. Again, that news was insane. We'll wrap that one up when we get back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. U.S. yen had, like I said, a pretty wild ride this morning. Came on down here and was oscillating around. Came right on down to our buy. We had a buy there at 109. Market did break the high on that, so that means we got momentum confirmation. Keeps going. And if you're in the trade, you're in the trade. So it does pop up because you got in here, and it just kept going on you. It moved on up to target 1, and let's see, did it get to target 2? Let's see here. I don't know if it got the target within 5 ticks of target 2. Nope, there's no way. That's just the liquidity price right there, 109.40. We got to, what, a 109.34. We did have that 0.7 deviation level, so that would have been another area where you could have looked at targeting, tightening a stop up if you were trailing, again, at each deviation level along the way. So check that out. We got that one. Then it comes on down. And so we got a nice, like I said, a little profitable trade there, at least to target 1. Comes on down. Not a reset yet. Finally becomes a reset 1, 2. Does break the high, so we're in the trade. Does take a small loss. It's a pretty tight stop loss overall. Like it's really a tight stop loss of 10 ticks. So it takes a small stop there right here where you get in. You get stopped out at 10 ticks on this trade. And like I said, I kept that one just really tight. It's like if it's going to break there, I'm really nervous about it flying on down. Going on forward, look at, okay, does reset, gives you another entry, 1, 2, 3. This one gets you out. It's about a 5-tick stop on that one. Okay, so at this point, you take in every trade, you're basically right at, break even on the trades. And then we get another entry. So playing it again. And this time it flies on up, flies up 1, flies up 2. We're within 5 ticks of target 2 right now. And so that gives us about 15 ticks on the first one and then 40 ticks going into target 2. And there actually is a target 3 up at 109.65 and a target 4 up at 110. So trying to climb on back up there. If it keeps breaking those levels, it could move on up to each one of those. That gives you the potential profit targets right now. Going in, if we break through that 1 deviation, looking at 109, like I said, 65, and then 110 after that for our trading plan for the day. And but try to find some of these, obviously, that haven't completely fired off yet. We just had a lot of the activity early in the morning. And so we can measure these out as well to sort of show the net result on them there. We got that one. Like I said, about 10 ticks. Give or take exactly where I, plot the marker, plus or minus a tick. And then goes right on over here. Or at least at this point, and we may keep going there on up. So we'll see if we do hit that next profit level. That is going to have to break through 1 deviation. That's a tough thing to do. But there's been a lot of movement today, a lot of strength going on. And so that could definitely could happen. Okay, so that wraps up the U.S. yen for us. And it's trying to go through, like I said, a variety of markets, give you as many breakdowns as we can. We covered, I want to say we covered the euro dollar for you. We looked at that. We talked about the pound dollar, dollar yen, the Aussie dollar. Let's see here. Actually, we may not have covered the pound dollar. Pound dollar's been pretty light, but I think we're out of time today. So we'll have to catch it tomorrow. Y'all have a great day, and I'll see you tomorrow on the Diagnostic Trading Hour.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.